Yo, what's up? This is Noble. Today is March 9th. It's 3:45 p.m. Eastern. So we got 15 minutes before the market closes. I hope you had a good day. If you didn't make some money, if you're not trading, I hope you learned something important, something valuable, something that'll help you to make money the next day. So, what I'm going to do, I'm going to spend 30 minutes max. I want to walk you through some really solid. I want to walk you candle by candle in a way that most gurus, traders, folks who go live and have the confidence to do what I'm about to do just don't. I want to walk you through candle by candle, bar by bar, price action, S&P. Why the S&P? Because it's what the entire world is constantly looking at. Even if you don't trade the S&P, you should know where it is. If you know what S&P is, you know what NASDAQ is. You generally know what the Dow is doing. Any decent ETF that's a good ETF is going to match up. It's going to be following the S&P. The VIX, which is known as the volatility index, the fear gauge, it's measuring 30 days forward looking S&P futures contracts. So everything pays attention to the S&P. You should too. You should too. I want to show you some intraday stuff, but it applies to any and every time frame. I want to show you some intraday stuff, but it applies to any and every time frame. I think I've been investing, trading, day trading. I got started in what was that, 2010, 9, somewhere in there. I got my MBA, was working in corporate America. Started trading futures. Day trading futures was pretty successful at first. Thought this was going to be an easy walk in the park. I quit my $112,000 a year gig at Bank of America. And then I realized, trading's a lot harder than I thought. So I've learned a ton. I love helping. I've done a lot of consults. I'm actually running 2 live classes right now. A 7-week futures and an options class, teaching both at the same time. And I'm here at this place just wanting to show you guys more price action and really get into the mechanics of it. Why? Because, I know you're looking for a system. I know you want to make more. I know maybe you're new. Wherever you are along the journey, we're all getting better. It's a lifelong process. You're really trying to master yourself. A lot of people run, though, to systems and technicals and indicators, and that's cool. I love the technicals. I specialize in them. I've spent literally almost 20,000, probably 20,000 hours trading, analyzing, studying, teaching, consulting, all of that. Just put it all in one bucket. But what I can say to you is if you can't just look at a chart without anything on it and make sense of it, you're going to struggle because you're going to lean on indicators. And nobody can really teach you price action. Don't get me wrong. We're gonna go through some 2 charts today. But it really does take time. It takes years. It takes seeing this stuff thousands upon thousands of times for you to really understand it, in my opinion. And I'll say this quickly too. I think the real definition of price action is being able to understand what bulls and bears are both doing, what they're thinking as price changes. Right? We get up above a candle. What are bulls and bears thinking now? We get below that candle. We hit a high. What are bulls thinking? It's just constantly being aware of what both sides want and what prices are going to make them more probable to do what types of actions. Right? Short squeeze, bull squeeze, bullish squeeze. It's all kind of stuff you just need to know. But at the core, it's all price action. It's just being able to pull up a chart. Anything. Doesn't matter what the chart is. Foreign exchange, futures, options, stock, crypto, it's all the same. If you can't read a chart, and we say that so easily, like, read a chart. And it's like, no, it's more than just, this is a green candle, price went up. This is a red candle, price went down. No, it's a lot more involved. So I'm going to actually go through. Let me get my charts up. I'm going to look at, I'm using the S&P, but instead of going to the S&P, the ETF that you probably buy, shares from monthly or whatever. If you're like long term investing in S&P, I'm actually going to use the ES / ES, which is the S&P futures. Because if you don't trade futures, I just want to expose you to futures. So we're gonna talk about futures. Let me take this stuff off my chart real quick. Okay. So the only thing on my chart, there's only one thing on my chart. And I'll start with yesterday. But what I'm going to do is I'm going to start with yesterday, and I'm actually going to start not from when the market opened at 9:30. I'm going to start where the market truly opened with futures, which was basically 6:00 p.m. the previous day. Right. So I'm going to start there. Why? Because that matters. It matters. It does. It matters. All right. These candles are 30-minute candles. You know what? Let me see. Let me check something real quick. Because I want to make sure these are clear enough for you guys to really see well. You can see these. I'll make it larger as I go. So here we go. So if you're here, right, think about it like this. I know you just saw the entire day. We're going to cover the entire day, but you don't know what's coming, right? 9:30 is this first little right where you got the darker red black area. That's 9:30. That's when the stock market opens, right? But let's go back. Let's not act like it's easy to do these things when people just look back and tell you what happened. But can they tell you like live if we went through this? So I'm really trying to show you what live real traders are thinking bar by bar. The analysis doesn't stop. I had a question last night in my options class. And we're in the early, stages. We just did some technical analysis 101 type stuff. It's a 7-week course. This was week 3. I'm starting them with technicals, basics, right? Trend lines, swing lines, support and resistance, moving averages, right? Volatility, how do they, right? Core basics that are the same stuff that you need to become an advanced trader, right? You don't get to skip over those basics, right? And it takes time. You don't get to skip over the basics or the time. Everybody's trying to become advanced when advance happens with time, right? So check this out. If I go here, all right, then what do you notice? What's the trend direction? If you get the trend direction wrong, it doesn't matter. I don't care what you buy. I don't care what price you get. I don't care what your risk to reward is. I don't care how small your losses are. If you're going the wrong direction and you don't know when to go with the trend or when the market changes and when you should counter trend, you're going to lose money. So, first question you should be thinking with every single chart you ever see, subconsciously in the back of your mind, without even saying it out loud, what's the direction? What's the direction? That's always the question. What is the direction? All right. So before we get here, let me put a little 1 because I'm going to start here. I'll put a little 1 right there. Right. So I'm going to start way over here, but we're not going to jump there yet. Right. That was candle 1 from yesterday, 30-minute chart, but we're going to start. Right. So I want to use I'll go to like the intraday analysis there. But before we get there, what's the direction? Right? There's always history. You don't just pull a chart up and say, "Oh, right now it's a red candle, so I guess it's down." No, what's the story? What's the history? Where have we come from? These are 30-minute candles, so I'm thinking more so if we talked about like what time frame, just worry about the 30-minute. Don't get real advanced. I'm not talking about the day trend, the 4-hour, the 2-hour. I'm only talking about this one time frame, the 30-minute time frame. That's all we're talking about. All right. So here's something I would advise. If you ever get confused on direction, you should be able to do this. What is this? These are swing lines. They are clearly showing you the highs and lows, the peaks, where the market was able to make some money, reverse. Right, where we pivoted from different places, right? It shows the full extension of bears could only push us down to here, and then maybe bulls started aggressively buying as bears started to take profit. That's why the market is always up and down, because you got two sides, and when one side makes a pretty good amount of money, there's a nice trend. Guess what? That side is going to take some money off the table. That's when the other side is going to get in, noticing that they're getting weak. All right. So when bears get weak, bulls get excited. When bulls get weak, bears get excited. That's what literally is creating these up and down trending patterns. Right. It's two different mindsets, two different sides of the coin in this exchange, stock exchange, right? Exchanging money, profits. Every time somebody wins, somebody loses. Right. So what was the direction? Well, before we even go there to say what the direction was, we got to introduce a real simple concept. I did a training on this. It's on my YouTube channel. I would advise you to watch it. It just builds into what I'm teaching you now, what we're going through. All right. I talked a lot about ranges. Why? Because before we even worry about, oh, well, the direction maybe it's going to come back down to this low right down here. Maybe we'll get down there. All right. So this was a really important low. This was the last high. These little dotted lines, these are called pivots. If you don't know what pivots are, but you use Thinkorswim, I'd advise you to put pivots on your chart. If you do any intraday trading, we perfectly went to this pivot and bounced. We perfectly went up to this pivot at the high pre-market, and we dropped. We faded for a reason. Those pivots matter, right? So put those on your chart. Here's what I'm actually going to do. I'm going to zoom in here. Clearly the direction was down, all right? Hopefully it didn't take you a long time to see the direction was down. Why would I say it's down? Because we were getting new lows. All right. This right here is classic. It's a low. It's a small high. It's a lower low. Right. So when you have lower lows, lower highs, it's a downtrend. That's all it is. Basic stair stepping down. All right. We had this move back up. All right. So we got a little bit above here. All right. Went back to that same area. Actually ran right to it really fast. And then we just ranged for a while. All right. So we're actually ranging inside of what candle? Let me show you this. We're ranging inside of this big candle right here. Put a blue box over it. We're ranging inside of this bullish move that pushed us all the way back up to this last swing high. All right. And that's all the market is constantly doing. It's trying to test previous highs, because you can't go higher unless we break a high. By definition, you only can get higher when we're breaking the highs of the previous day or the previous week. All right. So we got to these new highs. I'll extend this just a little bit to see that full range. All right. So we're just stuck in here for a couple hours. We didn't go anywhere. We just ranging. We didn't go anywhere. All right. So if I zoom in here, I want you to see that a little bit closer. Then I'm going to go bar by bar. And here's the first candle. 30-minute chart. Not today, yesterday. First candle. So I marked this off. I said, well, you know what? I know we hit this pivot, had a little hammer there, broke the low of that hammer, dropped for about a good hour. Yeah. So I was actually, even though I know we had the range I just showed you, that really big candle, I wanted to see, will we go lower than this last little previous swing low we made? All right. Right off the open, we pushed down, we pierced it, didn't go any lower. Where's a trade? Do you see a trade? Do you have a trade? Direction is down. We're really close to a pivot. We just tested an area we just tested about an hour ago, but we didn't go any lower. So does that mean you should just short it? Probably need to know more than that, right? Next bar. So price went lower. Now, for me, if I actually had to show you what I really do, which I can't because I'd have to explain it, which I literally can't even explain it. sophisticated, not necessarily super complex, but just it would take way more time than I have to actually explain it to you. Plus, I actually teach what I do in my class, right? So I can't. There's literally no way I could explain it all. But I say that to say I don't actually trade off the 30-minute candle. My entries are based on a 1-minute entry, right? So there's actually in here there is a trade. There actually is a trade in here. You can't see it. Don't worry about that. It's more sophisticated. We just want to talk through the price action. So this candle number 2, right? Lower, lower. We went a little bit lower, right? So if I step back just a little bit, I was trying not to show all of that. Then what I'm also paying attention to with that candle, and once again, these could be just like what I'll do is I'll put like a little line. Sometimes I'll put an alert, right? Because I want to know this candle here. This is when a lot of bulls got in, right? A lot of bullish activity here, right? So I'm actually still very much paying attention to what? The bottom of that candle. Why? Because we get under there, then basically all of these bulls, right? Think about it in a real simple way. If we take this bar out, then all those people are now losing. Anybody who bought early, this was the European session. This was like 3 a.m. when Europe opened. One of their markets opened. Market opened and took off, right? Ran straight to this pivot, right? So we tested that area. Did not have enough bears, enough gas to actually go through it, right? To go through it. So what happened on the next bar? This bar is really key too. Why? Because this is a really strong rejection. Look at that. We perfectly went to the low of this candle, which you should have noticed, right? If we were talking, to my day trading folks. And even if you're not a day trader, I'm still just basic price action, right? So you still need to pay attention. This could be day chart, month chart. I don't care what the chart is. If you don't see these ranges and know where to look, right? Because here, when we bounced and rejected off this 4160 area, which was the bottom, which was this, right? Back in here where you had a lot of this buyers to come in, right? That area didn't get taken out for a reason, right? And if you're a really advanced trader, you're not actually like waiting until we get down there to take a trade, right? You should have been short somewhere going down to that key level versus like getting there and then saying, "Oh, I hope we can go through it," because that's risky. The move is to the target, right? It's not at the target. It's to the target is where people are making the easy money. Because you don't know what's going to happen when we get down here. And what happened? We got there, really strong rejection of price. We got back up, push back up. All right. So still a down market, but a really strong push back up, which is telling you something about the bulls. They're not sleeping. Right, they're there. They are there protecting their profits. They're down there buying at 4160. The same reason people, for whatever reason, they bought at 4160 here early in the morning at 3 o'clock, at 10 o'clock or 10:30. Right, we got that push back up. 10:30 reversal, classic stuff. All right, so what happens on the next candle? I don't know. I would say this, just from what I've drawn so far. Let me put a little line here. Why am I putting a line there? Because that's the high of the day, right? And why is that important? Because it's the high of the day. We can only go higher if we break the high. Right? You always got to pay attention to these highs and lows. Always. Right? This candle, candle number 3, what did it do? Did it engulf? Yeah, it engulfed. That's a big word. This means it basically closed higher, right? It's wider than the entire previous candle, right? So think about that. All of these bears, people who were short here, if you got really greedy, expecting us to just keep going because the market's down, oh my God, some trader guru told me to just short the market tomorrow. If you got greedy and you shorted it, but you stayed in too long, guess what? Now you're panicking because price is all the way back up. And this is why, right, this exchange happens. Because if you bought anywhere inside of this candle at 10 o'clock, if you waited too long, By the end of 10:30, 30 minutes later, you're now losing. How do I know that? Because price is higher here at the end of that candle than the entire candle before it. Right? That's really what we're talking about when we talk about price action. Okay, if you're a bear, now you're safe, you're happy, you're like, whew, we push back down. And it depends on where you bought, right? So now what are we seeing? This is kind of like tug of war. All right. Really strong candle. We pushed back up. We didn't get back to the previous high, right? We didn't test the high of the day. So now if you were bullish, oh, right. So now what am I thinking? Well, can we take out bar number 3? If we go under this, which was my first, right? I'm really just going back to the first thing I said. If we go under this bar, right, then that's probably even more reason for bears to get excited. Why? Because a lot of bulls got in here. So if once again, if we got back under candle number 3 and this ranging candle, then you got bears who have reinvested, who are basically going to get wiped out if bears were bearish enough, if they were strong enough to pull prices back down. Right. So you got a reason for some bulls to have bought down here at support. But then you got bears, clearly. Market is down. We're trying to push down. Trying to push down. Next candle. Look at that. Ran right back to these lows again. And what happened around 4160? This is the second, third, really almost like the fourth time we got down to 4160. And price pushed back up yet again. So if you're a bear now, you may have made some money on that first drop, maybe on the second one. Now this is getting frustrating on both sides. Bulls pushed up, bears pushed down. Actually, bears pushed down. Bulls pushed it back up, bears pushed it back down, and then bulls bought it again at the bottom. This is literally just tug of war. That's all this is. All right. And at this point, you really can go here. Right. You really should be. I put the wrong thing. At this point, look at what we're getting now for the day. Right now, we got a big range. Right. So we were in a range, but now price really isn't going anywhere. Right. We just kind of keep bouncing. Right. So this really big bullish bar, we're sitting there. We pierced the high. We came right back down. So we never closed higher than this bullish bar, number 3. Right? We never closed higher than that bar. We didn't close lower than that bar. We went to both sides. This is a choppy market. Welcome to trading. It's choppy. We went to both directions. We went to a low and we pierced the high of that candle and still really didn't get any follow through. So which way are we going to go? Got to be patient. Maybe we're changing direction. Maybe the next candle drops and we do get under that 4160 area. I don't know. The question is, what will you do if this happens? All right. So that's what I'm always thinking as a trader. I'm always like, here's the setup I want. If I don't get what I want to see, I don't take a trade. Because clearly what I'm assessing and what I, the patterns that I know, they're not lining up, right? The price action says, if this happens, then this should happen. If that thing that I want to happen happens, you take a trade, you know what you're doing. You're literally in front of it. You're not predicting. It's more so really just recognizing how these price movements affect both sides. Once again, classic price action. So next candle, what happens? Out of nowhere, look at that. Right? Huge candle. So let me go here. Let me point out a few things. So this candle did a couple of things. We broke the high for the day. So now we're at new highs. 30-minute candle. These lows that we made, right, were intact. So these lows down here stayed. Actually, let me. Did I just do that? Man, I'm so glad that didn't get placed. I hit the wrong button. Tried to place a trade. What do I want to do? Oh, so I'm going to draw this little line here. I actually want to copy it. So think about bar number 3. All right, bar number 3 is important. Did we close higher or lower than bar number 3? We closed higher on this bar, right? So clearly, something major happened. You could have also, you should have had a little trend line drawn, right? So we broke that trend line. We closed higher. We pushed through. We closed higher than bar 3. So think about anybody who was short this morning. 9:30, 10, 10:30, 11:30, 11, 11:30. When 12 o'clock came, what do you think happened to all bears? All bears are now losing, right? Those stop losses got hit. Uh, you probably weren't expecting it. I wasn't expecting it. Shot up. I was like, oh, and it just kept going. I was just sitting there watching. I was like, oh, okay, direction's changing, right? You should also see this too. We also, that big candle got us back. It got us back above the high of that bar that we were paying attention to. And it also went higher than the pre-market high. That's 1, 2, 3, 4 different reasons for the market to continue to go higher. Right. And if you're thinking about how people trade these dotted white lines, if you were bearish and you were shorting using a 30-minute chart right here at 9:30, you know where you would have put your stop? You would have put your stop above that candle. When price pushed all the way up here on candle number 3, if you were like, you know what, I think it's going right back down for whatever reason, right? And you got in on this next candle, you would put your stop right above that, right? So think about it. When all of this price action, all these bulls came into the market, and we went to 41.99, 41.20, 42.22, 42.30. As we're going higher and higher and higher, all we're doing is hitting people's stop losses, and they're getting out because they're losing. Which actually, think about it for a second. If you were bullish yesterday and you bought off those lows down at 41.60, right? If you were bold enough to take that trade, you trusted that big bar from 5 this morning, that morning, right? Then you're hitting the buy button to get in. But bears who are now realizing that, oh snap, the market is really, really bullish. Looks like these bulls are not playing today. If you were in, let's say you were up, I don't know, 500, 1,000, 200, and you're now at break even, you're now at negative, whatever. What are you going to do? Now you got a decision. Are you going to sit here, have your ego in place and just watch the market take all this money from you? No. You're going to hit the buy button to get out of your trade if you were short. So bulls who are watching this and seeing this momentum come in, they're going to get excited. They're going to hit the buy button to get in. Bears who are panicking are going to hit the buy button to get out. And that actually accelerates that move even more. Right? So some people are hitting the buy button to get out. Some people are hitting the buy button to get in. All that buy. Y'all ever watch Jim Cramer, his little sound thing? It'd be like buy. All that buying is pushing the market higher. It's saying there's more demand for this thing. Just like when people want Jordans or Birkin bags or anything else that has demand, the more people want it, the more value. Right. So as everybody's pushing buy, some people to get out to stop losing money, bears, bulls to get in to take advantage of this big move because maybe they were looking at we broke a trend line, or we broke the high of candle number 3, or we broke the high of the intraday, or we broke the high of the pre-market. Whatever the reason was, you're reading price action, and you were right. As we go higher, that's going to affect the other side. Right? That's really what price action is, right? Understanding how both sides are being affected. So let me go a little bit more. So here, after this candle, what do you think will happen next? All right, I'm gonna take some of this stuff off just so it's not crazy confusing. What do you think will happen next? What do you think will happen next after that type of move? All right, let's think it through. Rough day. All right, started off bearish. We dropped. Oh, went perfectly to where we knew we probably were gonna have some resistance, some support as well. Bounced off 41.60, came back up. Bears tried again. We pushed down to 41.60. Bulls this time, pushed us right back up, right? So there's we don't agree on price down there. Some people are buying, some people are selling right there, right? There's this almost equilibrium If we talk like supply and demand trading, all right, down there is where like there's an equal number of people on both sides. It's like that's where you get those ranges, right? And I would almost say, to even be more clear, you have so many bears who at that 4160 were not willing to try to trade through that. They were getting out at 4160. Bulls were getting in. It was like the perfect baton pass. When you see areas like that where price just will not go lower, it's because both sides agree on that price for different reasons, but they're agreeing on different things. Bears are saying yes, 4160 is the price. If I can ride it down to that, I'm getting out. Bulls are saying yes, as long as we stay at right around 4160. If we don't go through, I'll take a play. I'll get in at 4160. So you don't try to ride through it. I'll get in there. We agree, right? And think about that. Bears made money down to it. Bulls who were early got in and rode it back up. It's literally a baton pass. So what do you think is going to happen after this really big candle? Is price going to collapse, or is price more likely to keep going? I'm gonna tell you what's gonna happen. What's more likely to happen is people are gonna see that really big candle and get excited and instantly think, oh, price has to keep going. We're gonna keep going up. So there's always usually always. That's tough. Let me pull that back. I think newbies see a candle like that and instantly think has to go higher. Some people see a candle like that and instantly get scared. I don't know which one, which person you are, but let's see what happened next. Went a little bit higher, just a little bit higher, a little poke. Right. So bears clearly after this have established that they are now in control of the day. If you're a bear, depending on whether you made money or lost money back here, right? I don't know if you really want to try to mess with this market. Why? It's clearly bullish. It's clearly bullish. Why would you try to go against the grain? Why are you trying to go against this train? All right. Next candle. Next candle went higher. Got really close to this pivot at 4280. And then we made a really. Now, this candle is important. Why is this candle important? Because this candle is your classic at the high of the day. After a really big move, everything, right? So nothing goes straight up. Do we have days where the market goes straight up? Yeah. Do we have more days where the market goes up and down? It pulses up and down as people get in and out taking profits? Yeah, we do that more often. All right. So let me put a little so this hammer candle, all right, it's at the high of the day. It's generally known as a reversal candle. Reversal candle. Why? Because that candle itself is screaming bulls were buying for that entire 30 minutes. And somewhere in there, around 15, 20, somewhere in that single 30-minute time frame, bulls were buying. And that entire move flipped from bullish to bearish in that 30 minutes, right? So it's telling us something. That one little candle is telling us something really important, right, about those 30 minutes. All right. We started here at 42.54. We went up to 42.74. And then we dropped from 74 all the way down to 38. All right. So we pushed up 20 points and then almost dropped 40 points. Think about that. Bulls push price up 20 points in that 30 minutes. And then we still from that new high end up dropping 40 points. All right. So the move down was twice as big as the move up. All right. So this is why hammers, when you see them, you got to respect them. So now what somebody like me is thinking is this. I'm going to tell you exactly what I'm thinking. I'm thinking, okay, clearly the day is still bullish. Right? Every indicator you probably can use or should be able to use, right, should have told you after this candle, right? After this really big bullish candle. Let me call that something. Call it bulls. So bulls took over right here. Right. We broke through highs. We broke through every stop you could think of. I mean, we got higher than every single candle. So any bears, once again, who were short, who had their stops above this candle, maybe above this candle, maybe even above the high of the pre-market, we took all of those stops out. All of those fools are losing. Right? Price went higher for about another hour, and then we had a really strong pullback. So what I'm thinking is this: when I see a hammer, I'm like, real simple rule of thumb. If we go lower, if we can break the low of that candle, usually there's a higher chance of that really being an actual reversal, right? And the market coming back down. Could the market come all the way back down to this low? Like, could we get all the way back down to the lows? Yeah, it's possible. But we need some candles to fail, right? The only way we can get down here is we have to break lows. We have to break the low of this candle, the low of this candle. We got to get under this really big bullish candle for price to get all the way back to the low again, right? Same way going up. We had to break the highs of some of these candles. All right. So next candle, what happens? Look at that. Really strong bearish candle. Why do I say really strong? Because there's no wick on the top. So that means from the moment this candle opened at 130, we didn't go one tick higher. As soon as 130 hit, if I change this to a 30-minute 1 minute candle, we did not go higher for 1 minute. For that entire 30 minutes, there was a lot of selling, which actually kind of makes sense. We're back inside this candle now. All right. So what am I looking at? What am I paying attention to? Where's the area to me that matters? All right, well, if I take this box, then it's the same thing. This is the candle now that I'm like, well, I really don't know if I don't know if you want to be bearish as long as we're inside of that. Bulls are still in control. But we did reverse pretty hard. Some of y'all would throw a Fibonacci on here, whatever. Okay, cool. It's all kind of stuff you could do, right? But this is really the candle that to me matters. There's a lot of chop down here. Chop just means, there was a lot of back and forth. So we got to get here. We got to break these lows before we can get back to the low. And I'm not guessing that we're going to get back to the low. If you know what happened yesterday, we did. So I'm just kind of spoiling it for you. But this candle after this reversal makes perfect sense. This is a hammer in a down market that had a really crazy 12 o'clock. Most people go to lunch. That's just rare. We rarely get huge candles at 12 o'clock, right? Liquidity runs. There's all different kinds of things you can call this move. But either way, price went higher. That was unexpected. The trend was down. Right? The trend was down. Broke to new highs. Didn't last long. Hammer telling you probably going to push lower. This candle, very strong. A lot of bears got right back in, really aggressive. That's why this candle is so strong. It's only a strong candle because somebody saw the previous candle and said, yeah, I'm getting in if we can go under this candle. And we pushed down really strong, really hard. What happened on the next candle? Oh, check that out. Look at that. Where did we go? We tested the bottom of that candle. We ran to it. Are we going to be able to get through it? Or will it be rejected? It was rejected. We pushed back up. But we're still inside the range of this bullish bar, right? Are we going to get back up? We could go all the way back to the high now. All right. And this is literally, just 30-minute candle by candle, but this is actually a hammer off of support. Right. So we bounced here. I'm calling this support because we bounced off this area. I don't say we bounced twice. We bounced once. All right. So we identified this was the bar that, kind of changed the day. Bulls made some money. Some bears got in. Market started to reverse. Bears got a little bit more aggressive, right? Had a really strong 30 minutes. We went right back to 41.80. But now we're making a hammer going the other direction. So would I expect us to, would I expect price to go higher than that bar? It's the same kind of rule in my head. All right. It's like if we get higher than that, yeah, we should push up. Right. Because the bulls are not done. They're still there. There's still some bulls pushing. There's still some bears trying to get this thing to go lower, but there's some bulls. This is the fight every day. This is all this price action stuff is. All right. So if we get higher than that, where can I expect price to go? Really, really simple. This is why I said you got to keep these pivots on your intraday charts. I don't care what the stock is or futures. I would expect us at least to go back up here to 42.30 to test that area. Why? Because I know the day is still bullish. How do I know that? Because we had this really big bullish candle. We got a full retracement all the way back down to that same entry, and we pushed right back up. We only pushed up because somebody's buying again, right? So if we can get above this hammer, right? And I don't know if we'll get above right this bearish candle, but think about it like this too. This bearish candle, I'm gonna call that bearish, right? There's some people who shorted under or somewhere in that 30 minutes. And where's their stop loss? Their stop loss is above the candle. All right. So I don't know if we're gonna get above that stop. If we get all the way back above here, we're probably gonna run to the high. All right. That's just my normal logical thinking. Why? Because if we can take this candle out, then all of these people who were making money short, if we can get back above that candle, now they're losing. Why would they stay in? And that's all this is all day, every day. Somebody's potentially losing. When y'all start losing, what do? You get out. If you're losing faster than you thought, what do? You get out. If you put your stop above the candle that you got in on and we go all the way back up if you were short, what do? You get out. Right? That is what price action is. So what happens on the next candle? Price push back up. Got really close to that pivot. Did it take out this high? Nope. Didn't take that high out of the bearish candle. Push back up. So now we're kind of dancing inside of here. All right. So really, I'm like, okay, we're going to close under this bearish candle. All right. This is now kind of what I'm looking at. Right. Because we're starting to range inside of that. Right. So now you got like a range inside of a range. Right. You got this bearish candle inside this really big bullish candle. But we went down to test the bottom of that bullish candle and we bounced. Right. So I'm paying attention to the high of this candle. And probably even more importantly, now, I'm paying attention to, are we going to break the high or the low? Right. We gotta go one direction or other. All right. We broke above that little hammer. We pushed back up to the pivot. That made sense. Didn't get enough to go through it. Are we gonna go through it? All right. If we get above this candle, all right, then we should try to test this area. Doesn't mean we're gonna be able to get through it. But if we get there, then that's information. All right. So you're analyzing before you take a trade. I would say you're analyzing just a little bit, or at least managing, but still paying attention to what price is doing while you're in a trade. Because what if something changes and you're like, you know what, my thesis changed, the pattern, my setup was here, but this is going the wrong direction or whatever, something happened. I'm going to exit early, maybe before my planned stop loss. Right? But did you have a stop loss when you got in the trade? You should. And it should be above or below some candle somewhere that makes sense. Right. So next candle, what happens? So check that out. We actually tested the pivot. We went a little bit higher. And this entire candle, it pushed from 17 up to 38. So that's 20 points. And then we dropped from 38, just say 40, all the way back down to 93. So it's that same kind of reversal candle, right? Bulls pushed it up 20 points, then it drops 40 points. This candle pushes up 20 points, then it drops a good 40 points, right? When you see those candles, what's happening inside of them is bulls are winning, and then bears are saying, nah, we got it. All right. So once again, did we close under that bearish candle? Yep, we did. We closed under this bearish candle. So now what am I expecting? Real simple. I'm definitely expecting price. If we go under this candle, we should test this 4180 again. And that'll be like technically the second time we'll touch it. It's late in the day. This is what is this? This is 3:00. There's only an hour left in the day. Day was bearish. I'm like, we probably just gonna come back to the low. Now, why did I say we're probably going to come back to the low? Because the day was bearish, right? The morning started bearish. We had this really crazy bullish move that was unexpected. Quickly got a reversal, came right back down, right? So a lot of those bulls who were only able to make money for a good hour and a half, they're right back to where they're not making money, right? If we can get under that candle, right, that means this candle here, right, the bearish candle, we danced inside that candle for an hour and a half. Never went higher than that candle, though. Right? Never went higher. So think about it like this. We never went higher than that candle. So really patient bears who got in on this bearish candle, who had their stops here, they never got out. They didn't have a reason to. If you simply put your stop loss at the top of that candle, we never went back to it. We dropped. We took a lot of your profit. You got in earlier in this candle, yeah, right. So you were making some money, came down to 41.80, went all the way back up, but clearly more bears got in. More bulls decided to get out. Right. So think about it. Some bulls are just getting out because we came all the way back to where they got in. Right. Or maybe you're a bull who got in after we broke the trend line. You got in anywhere above this line right here, this trend line break. Got in anywhere in there. Somewhere in here you getting out because we're lower than your price. So for those couple of reasons, it just kind of makes more sense in this market environment with this specific chart on yesterday, right? That if we break lower than this candle, we're going to 41.80. We have nowhere else to go to. But this late in the day, are we really gonna get bulls to just miraculously in the last hour take this day all the way back up? When it was a surprise they took it up in the first place? No, that's just not the most probable thing. So what happened? We came right back to the low. Right back to the low. I know that was a lot. That was a lot of thinking. That was a lot of processing. That was a lot of lines being drawn. I'm not using any special indicators. Only thing I have on my charts are pivots because I just want you to I'm trying to help more you guys realize that you need to put pivots on your chart. Why? Because where that high was, right? Where we have that hammer. As soon as we had that really strong bullish candle, if you would have said, no, but where you think price is going? I'd have been like, we probably gonna test this last pivot because we usually when we like break straight through a pivot, we'll come back and test it, which we did. And then we're trying to go to the next pivot. Period. We're going to the next pivot. We're gonna try to get there. Right. So if I had to take a trade somewhere up there after that really strong candle, right? What's my target? I'm trying to make money as it goes to that top pivot. I'm not waiting till it gets there and then gonna try and make some money. No. After that type of move, yeah, there's gonna be some follow through. It's rare to have a candle like that and then it just collapses and everybody gets out. No, because you always got some people who gonna get on board late. Right? There's always some late people to the party. Now the people who bought up here, let me put a line. Right? Think about this. Think about this. There were some bears. I'm gonna make this yellow. Some bulls. All right. So the super early bulls, super early, bought down here. Those were your super early bulls. When I say super early, high chance of potentially losing too, because you're technically buying when the market is down. You're just trusting that support area will stay support. That's early. That's super early. Right. You had some people that get in here once we got above. Right, above this bullish candle, and really when we broke this trend line. So I just put it at the trend line. Right. So from here up, you had another series of people buying bulls. Right. That's when the second wave of bulls got in. And then there's a third slower wave who they always, some of y'all do this, you always get in too late. Right. So some people got in bullish up here after they realized, oh, it's a bullish day because they watched the news and they heard this and oh, it's a bullish day. The market's back up. It's back up, right? But you're late to the party. And if you didn't know that a pivot was up here, right, why would you stay in? After this reversal, those people are losing. So they're going to get out. And all the people who bought all in here, as price starts to come down into that area, all of those people are going to get out. All right. So you still got the bulls here who got in really, really early. But even they, at the end of the day, are still probably gonna get out. Why? Because they made some money somewhere in here, and they were smart enough to get out and not be greedy. All right, so that's the bullish side. I would say if you were an aggressive early bear, you saw this hammer, you got in somewhere in there because of that hammer. Trend direction was still bullish, so you're going against the trend, but you're trusting that hey, market is down. This is just a little pop up. We right. So there's some belief there, but at that time, price was actually bullish. Right. We just pulled away from new highs. Right. But that was an entry for some people. Right. After this candle, you got some bears who got in after that, right? So once again, kind of like that second wave of people. They saw this move and said, "Oh, we're about to drop. Oh, the market's coming all the way back down." Now they ain't right. It was tough up in here, right? For an hour and a half, it was tough. But once we got this candle, right, then I would say you had another series of bears who really were just like, "Yo, we're so low. Bulls should be exiting." You had a lot of people who saw this candle and they got in here and just rolled this back to the low. And that's really both sides. You had early bulls who did like classic trend line breaks, and when indicators are changing from bullish to bearish, they're getting in. Then you always got some people who missed the real move, they get in too late. You had some bulls who got in at the top of the day thinking it was just going to keep going. That's when we started coming down, right? So this is just like classic stuff. Classic stuff. Dang, I said I was going to do 2 days. That was a lot. I'm tired right now. Imagine for those who don't day trade, like, and don't get me wrong, I'm not saying that no, I take that back. I think if you become really confident and comfortable with these tools, yeah, you can pull up I can pull up any chart and do that level of analysis kind of candle by candle to see the story. I kind of went through it in that way because I know a lot of folks are right now watching the market every single day. You're like, please let this dip that I done bought be a dip. It's kind of been a deep scoop because we haven't really popped up. Every time we go up, we come right back down. Right? Every time we go up, we come right back down. Right? In this current market environment. So I wanted to show you guys price action up close. It's not just I mean, and don't let me put my actual indicators on here. Yeah, they help to keep me very solidified, right? So the point of indicators are to really build a system for yourself to say, if I see this, and this, I will not take a trade, and don't break that rule. Right? If this, and this are clear, then I will take a trade, or at least I know I have a trade. Got a homeboy, love him to death. We were talking today, right? Me and him are kind of like right now, we're just bears. We're probably bears by nature, right? He told me he was taking a short, right? And he had his high above the stop. I mean, above the he had his stop loss above the high from today. But all of my indicators were bullish. So I was like, I hope it works out, but you're getting in a bearish move when the market is bullish. You're getting in really early. You might lose. There's a high chance you might lose. Why? Because we weren't bearish. We just weren't bearish. And there's all and what's really happening with a lot of people, they don't know it. You're predicting something that hasn't even really, your technicals haven't even given you a signal that that thing is about to happen. And there's a difference between that very, very subtle, you don't even realize it, but you're predicting, you're guessing, you want to be right. It's ego. You want to make some money for your family. It's that too, but it is a little bit of ego, right? And when I say ego, I just mean it's you saying, I believe this is going to happen when you don't really have any factual reason. If we just hit new highs and you're telling me you're about to short something, I'm like, even if you're right, you're still getting in very early. If it's going to come back down, it's going to reverse. The bearish trend will set itself. It'll go lower. It'll still pop back up and give you a pullback and drop again if we're really talking about a bearish market. But if we just hit a high and you're like, man, I'm about to short it, you're guessing. You're early. I hope you're right. But that type of pattern of behavior over and over will lose you more money than it'll make you. Because nobody can perfectly call highs or lows. Nobody. No indicator can either. Right. Um, so I might as well look at today real quick. Let me see if I can show y'all today real quick. I'm gonna go to a different time frame though, just for fun. Actually, should I do it that way? Oh, wait, hold on. So I got this one marked off a bit. So I'll cover this one a lot faster. I'll cover this one a lot faster. I didn't take any trades today. I traded yes. I didn't take any trades today. I had one trade that I really liked setup wise, but one really important thing for me, I couldn't check off my list. I couldn't say, do I have this, this, and this? I don't have a ton of stuff, but do I have this, right? Three, maybe like a subtle four things that I look for. I had like three of the four, but the one that really, really matters, and I had to say, do I pass on this trade or do I break my rule, right? And then lose, and then look back and be like, damn, you shouldn't have broke your rule, dude. Or am I okay with if this works out? I'm not in the trade. It works out. Um, but I at least was disciplined. Right. It's a win. It's a good day for me if I follow my rules and I didn't make any money. I didn't make any money today, but I follow my rules. Right. And so today, if I would have took this trade, it worked out. Yeah, I would have made money. I would have felt good. But the next three times that happens and I break that rule, I'm probably going to lose. So I probably just give most of that money that I would have made today back anyway. Right. That's the point of keeping your rules, having rules. Let's see. Let's see. Corey Patterson said, I stayed out today myself. The upside move was gone and the sale didn't go to my area until the end of the day. Yeah, I like it. Good stuff, Corey. Follow your rules. Follow your rules. I had a question. Good student of mine, student of mine, has taken one or two of my classes. She asked a really good question. She was like, Noble, when you talk about studying the market, she said, I'm gonna go here for a second. She said, when you talk about studying the market, right? What do you mean when you talk about studying the market? And you always say you spend time on the weekends during the day. You're still, even with as advanced as you are, you're still studying the market. What does that mean? Like, what are you studying? And I realized what she was saying is that she doesn't know what questions to ask. Right? She doesn't know what questions to ask. You got a couple hours on Saturday. You're not doing anything. You binge whatever you binge on Netflix. You're just kind of chilling. You're like, man, I need to spend some time with the markets, time with these indicators, time with my system. But what do you look for? What do you look at? It was a great question, and I gave her like 15 questions back. I said, honestly, I'm looking at, even if I didn't trade today, right? Literally, even if, because I don't day trade every day. Right? I didn't become a day trader because I want a day job. I just want the ability to make money any day I sit down to do it. Right? That's the point. I ain't trying to trade every single day of my life. Right? Um, and so I told her, I said, well, here's the thing. Even on days I don't trade, I'm looking to see, did my system work? Right? When I pull up a chart, I'm looking at what new information can I learn about the market? Every year is different. Every month is different. No 2 points in time are the same, really. Yeah, the patterns are the same. Yeah, stocks IPO, right? So it's like a lot of things happen continually, repeatedly, but no 2 moments in time are the same, right? So this, to me, in my head, charting trading is really like, you got to like be a data analysis person. That's all this is, are numbers. Is prices going up and down. That's all it is. We look at it in, these mathematical candlesticks, and you got Bollinger Bands and Keltner channels and the squeeze and Ichimoku cloud and MACD and stochastics and relative strength index. It's all just math and numbers. It's all just math and numbers. So with that, right, you ask questions about the data. What was the last high? What was the last low? Well, how long was the last downtrend? How long was the last uptrend? What do I consider an uptrend? Right? You got to have some of this stuff defined to ask the question, right? But those are the things I'm looking at. All the stuff I just walked you guys through. That's what I'm looking at. Where are the ranges? What candles matter? Does anything seem real sporadic? Did we just get a big, huge spike of volume out of nowhere that changed the direction in one bar? Why? Was it a report? Was it something bad about the company? What caused it? Right. And then, um, how is price acting now that candle has formed? If we get back to the low of that candle, right? I'm just looking, I'm analyzing, I'm just asking all kind of questions because I'm just constantly reaffirming what I know. all these years in. Every time I look at a chart, it's just reaffirming what I know. I ain't gonna lie, I per se haven't learned like something new or amazing, right? Because once you see these patterns enough, you're like downtrends, a little dead cat, like all the little terms people know. You've seen it hundreds of times. Once you're right into this long enough, and then you can be really comfortable about making decisions. A lot of people aren't comfortable with the decisions because you just haven't spent enough time yet. It comes with time. Like you can't rush it. Nobody can give you that 5-10 years in confidence. It takes 5-10 years to get the 5-10 year confidence. Right. So check this out. Let's do this real quick. I'm gonna do this one quickly. Way faster. So these are the last 2 days. So then check this out. Off that same bottom, right? We talked about yesterday, right? Off that same bottom, futures reopened of what time? 6 o'clock. They kind of closed, resettled at 4:45 to ES. So for about hour and 15 minutes, you can't trade. You can trade futures all day. Right. What happened last night? We hit that same area, right? That same area, going back to that original candle. Right. So going back here to the candle that we were looking at, which gave us that big, strong range, right? Because we had a lot of buyers to get in here. 3 o'clock in the morning when I don't know, it was Frankfurt, Germany, one of the markets over there in Europe opened, right? Market pushed up. We came back to test it 1, 2, 3 times. 3 times. We got back down there. We opened there at 6 o'clock, a little bit lower. What happened? We went up. Where did we go? We went straight to a pivot. Right? Little purple dots. We went straight to a pivot. I'm gonna fast forward through all this. All right. So market was clearly, we made a really big bullish move all the way back up. And so we hit this pivot, made a little drop, pushed back up again, made a little drop, pushed back up again, finally went higher. This candle did a little pause inside, and then we ran to the next pivot. All right, ran to the next pivot. Got some little dancing in here. All right. And so today, I'm gonna start from here. Look at today. First thing we did today, right near the open, we came back to this same little area that we kept touching all morning. We shot down there. And did price go any lower? No. All right. So that's like, okay. So it seems like this 42.30 is kind of holding. Okay, cool. All right. So you see that 42.30 seems to be holding. Look at that. Strong candle number 2. It broke the high of this candle. And we went perfectly back to the pre-market high. Okay. So today was bullish. We were bullish all night. We were bullish at the open. We pulled back right in here. We bounced off that pivot, didn't go any lower. We ran down here to 42.30. That was just support. We had some support down there. Every time we got down there this morning, we just bought. We bought. Ran down there. All right. Bears who were really aggressive, they got out. All right. Next candle. Doji-ish. So this one's kind of ugly. All right. This is like market's confused because it pushed up and then pushed down. Yeah, it's a red candle. It closed bearish. But we really didn't go anywhere. We tried to break the high. We didn't have enough momentum. We didn't have enough people to get us really through the high. So now it's like, we're testing the high. We're testing it. Right. But this candle number 2 is a really strong candle. All right. So now I'm paying attention to candle number 2. Are we going to close under that candle? Oh, if we get back down there, that's not good. If we get back down there, then you already know we're running back down to 42.30 again. Right. We pierced the high. We tried to go higher. Didn't really have enough momentum. Look at this. Another doji. Candle of confusion. But we're still inside this candle number 2, right? So this is still a good thing. It's creating what's called a bullish flag, right? It's like a big move up and then we go sideways. We usually just go higher. All right. Why? Because we never took out candle number 2. All right. So candle number 2 is the key. Number 3. Okay. We finally got a little bit of follow through. right? So bulls stayed bullish. Bears did not get hyper aggressive. We finally got above this pre-market high. We closed higher than candle number 2. That's a good sign. That's even more reason to be bullish. But you don't want to buy. You don't want to buy high. You want to buy low. Ugh. But we're bullish. Okay, cool. We're bullish. Candle number 4 pullback. I was watching this candle. I was like, oh, this might be the one. This might be my entry. But once again, based on my system, there was a reason I couldn't take a trade in here. There's a reason I couldn't. Usually it keeps me safe. It protects me from losses. Today it didn't really matter. I actually would have made money. But once again, I want to build healthy habits. I don't want to be lucky and then trust these times that my system doesn't protect me, right? So yeah, I quote unquote missed some money today, but not really. Right? I follow my rules. Right. So this candle pulls back. Okay, cool. Kind of dancing at the high. That's kind of expected. Why? Because we didn't have a strong move up. If it took us an hour just to push through the high. That's not a really strong market. That's not a strong market. If it takes an hour just to get above the high. And we just sat there literally for like these 2 candles for 30 minutes. We ain't really go anywhere. Right. 4th candle, little pullback, some bulls, right? Taking some profit. Kind of saying, okay, I don't know. So are we going to be able to go back up? If we get under this candle, will we drop? Well, what's really important to me is this candle, candle 2. I hope we don't take that out. If I'm bullish, if I'm a bear, I hope we take this candle out. But this move number 4, that's not enough if I'm a bear, right? If I'm a bear, yeah, I want this to go lower, but I want us to take this one out. We take this one out, all of the bulls who have made money today are now losing. So why would they stay in, right? I need that type of move, right, for price to really make sense to go bearish. All right, so I'm kind of giving y'all both sides, right? Next candle got a little small, little pullback. I got this little blue box here. There's something I can't show you on this chart, but there's something I specifically look for. It's like my little secret sauce. I only teach it in my futures class. I never show it live. Trust me. If it's your first time watching me, whoever you watch, they're not showing you everything they do on these live trainings. No, they're not. And I don't think we're supposed to, right? You're supposed to keep certain things for more organized, structured learning. I can't teach you everything in these little free lives, right? But I can in a very structured 7-8 week class because I can build it the right way and make sure I give you all the information versus just kind of giving you something and you thinking you know how to use it. I'm actually doing you a disservice by like showing you, trying to show you everything without really educating you on everything. All right. So that's why I'm keeping this real basic today. But trust me, there's a reason right in here I expected price to bounce. Right. I wanted price to come down to this area and I expected it to go back up. But once again, there was one little reason that I couldn't take the trade. Right. I didn't want to break my rule. So the trade was down there, as you can see. We push right back to these highs yet again. Right. So candle number 2 is intact. We did go under candle 3. Right. So bears had a little bit of, 30, 45 minutes of a little pullback. But candle number 2 is still intact. Right. And then we created, let me move this candle number 5. Right. So now we got a second splurge of buyers. Right. A lot more bulls got right back in. We went right back to the last swing high. All right. This takes us to 11:30, 12 o'clock, 12:30, 1 o'clock. People going to lunch. Probably just going to get a little rangy. I'm usually, if I ain't made no money by 11:30, 12 o'clock, I'm done. All right. So 11:45, 12, 12:15. Not big candles, little small candles, but still bullish, right? 6 candle, look at that. Candle number 6 at the high of the day. It looks like a hammer. I know you're probably thinking it's a hammer, and technically it is, but it's bullish. Right. So there's a difference between this candle number 6, which is green, and on the 30-minute from yesterday, this candle, which was a hammer, which is red. This was very, very intense selling after pushing up. Right. Whereas today, if I go back to the 15, the candle that made this little hammer, it still closed bullish. So it opened Right, open down here, we pushed up really hard and then we pulled back, right? So that's a different candle. That's pushing up, 20 points. And then at the end of the candle, we just pull back halfway. That's fundamentally different. I know it looks like a hammer, but it being red or green, it actually matters. These are the details. The details matter. So I wouldn't have looked at this and said, oh, if we get under here, we should drop. All right, I wouldn't have said that. This trade, if I would have took it, that trade is basically my risk would have been like 600. You kind of really want to have I got kind of two ways I trade futures. One is like a much bigger risk to reward, way less trades, maybe only 1-2 trades a day. The other one I could literally take and almost trade throughout the day. It's kind of like a 1-to-1. High probability of winning, but it's a different energy I have to pull it off, right? So I didn't have this trade, but that move about 30 points, which is like roughly 3,000, right? So 6-to-1, spend 600. You risk 600 to make 3,000. It's 5-to-1 risk to reward. 5-to-1, not 2-to-1, not 1-to-1, not 3-to-1, not 4-to-1, 5-to-1, right? You should know that with your trades. What's your risk to reward? We got up there, and then as you can see, we range. Peep that. We started ranging inside of this candle. All right, so candle number 6. Look at that. Peaked under it, just kind of sat in it. Okay, cool. We got a little pullback, but the day is clearly bullish. So for us to actually drop and turn bearish, we need a lot of volume. We need a lot of these bulls to get out. We would have to have some major things to happen. And once again, now I got candle number 5, right? This was the last time a lot of bulls got in. So we really got to take out this candle. Up here's a pullback. Okay, cool. It's a pullback. But it's still, it's kind of in this same range up here, right? If I almost kind of put this here, it's still just kind of in that same area above candle number 5. So we pushed higher, got some bulls buying, got some bears, right? But the bears not getting super aggressive. Bulls not getting super aggressive up there. Let me take that off. And then how did we end the day? Had a little pullback. We pushed back up to make yet again. So we made new highs yet again. Had another really strong bullish candle, a doji. Confusion. We pushed higher, almost a doji here, a little bit of confusion, right? At the end of the day. And so these two candles didn't really go anywhere. We broke the low of both of those, pulled back a little bit. That was it. That was the end of the day. So when you look at the whole day, matter of fact, I'm going to take everything off. When you look at the whole day, what I think you should see this. That's an uptrend. Very basic. Now you may or may not have, had some special indicators and all that good stuff. The other thing I probably should have put on this chart was if I just real quick put daily high. That would have made a big difference too. I should have told y'all that. The high from yesterday was right here. Right? The high from yesterday was right here. I'll make it a thick green line. All right. So we tried to get there. A little pullback. All right. We got really close, didn't get there, but had enough buyers, and then we pushed through it. We got above. Really didn't, we didn't really go once we got above the high for the day. I mean, we did test it and went a little bit higher, but strong pullback, went to the same area. So the major move for the day was really right here. Right? First couple hours of the day. If you tried to trade back here, I mean, yeah, you could have made a little something back to this high. Right? But most of the volume comes in at the open. Oh, you know what? Dang, I just did all of that. I did it again. Golly. I did it again. Yep, my bad. I did all of that. That's, you know what? I love this technology, but it's like if you forget if you forget to show your screen, It's done deal. Like nothing reminds you. Right? I don't have a co-host or something. I appreciate you guys. Let me see. I know I had all kind of comments. Craig said, "Can't see your screen." Somebody said, "Hello." Somebody said the chart is not sharing. Corey said, "Yo, you sharing this on Facebook? Where you sharing it?" Christopher said, "I've been doing paper trading and had some success and tried live with a few hundred. Had access. Had success. Wait, had a few hundred. Had success. The loss then succeeded, and the lost I got a little wild and paid going to practice more paper trade. Okay, yeah. I keep telling y'all, man, it's a journey. Ain't nothing wrong with paper trading. There's no nothing to be embarrassed about. There's nothing to I paper traded for 9 months before I ever took a real trade on futures for 9 months. And I only started trading because I got so comfortable. I got so good trading, and I knew it wasn't an amazing strategy, but I knew it well enough to know that yeah, it works. Right. Alicia said can't see your screen. Didi said screen ain't showing the last 10 minutes. Dang. That sucks. That really does suck. I got to figure out a way to remind myself to make sure I'm showing my screen when I go back. Because for me, I'm just flipping back and forth between the screens, right? So I got to look at what you guys are looking at to know if I'm showing it. And I thought about it right when I saw my bad. Um, I don't want to go through all that again. I don't. I don't. Yeah. Let me do like a really, really fast version for those of y'all who are still here. Really, really fast version. So let's do this. So market was up, right? So this area back here, right? This was that bullish candle that held all day. Every time we got back to the low of that candle, we bounced. We went all the way up here. We came all the way back down. We still bounced. All right. So we got some higher highs. We hit this pivot and then we ran to the next pivot. All right. We had the high of the day when we opened. So clearly the market was bullish when we opened today. Right. Clearly the market was bullish. So what happened? Well, we had this high. And then we had this high for the day. So if I wake up and I see like a higher low that close, I'm instantly like, we're going to the high. We're going to the low. Why? Because people are placing their orders there. People have stop losses above the high from yesterday. Some people want to get in if we break the high. Some people are going to lose if we break the high. The high matters. The low matters. So for very several different reasons, I just instantly assume, and I think it's a very safe assumption, that we are going to test the high. Are we going to go through it? I don't know. Are we going to touch it and fall the rest of the day? I don't know. But are we going to at least attempt to get there? Yeah. Most days we do. Right. But before we get there, we got to break this high. All right. So we bounced off this pivot right here. First 15-minute bar didn't really go anywhere. We're inside of the range here. This is what I was showing you guys too. So when we had this little pullback right there off the open, right? If I draw a line straight across, then that's the type of stuff you got to see, right? We push down. What did we push down to? Oh, we got some support back here. Why do I say we have support back there? Because we made this really strong move all night. Right? So this was European session, right? What did they do? They got a little bounce right here. Came back down. All right. Make sure y'all can see my charts again. Okay. All right. So we came right back up. So should you assume? We're trying to get to the high. Super basic. We're trying to get to the high. We're trying to get to the high. I didn't say we would get there. I didn't say I know. Right. I'm trying to be real careful with my words. We're going to try to get there. So this candle, right? Candle number 3. Third candle for the day, 15-minute chart. That was really important. Why? It established it was a lot of buying. We closed higher than the first 2 candles, right? So anybody who was short during this first think about it like this. Anybody who was short during this candle and anybody who was short during this candle, at the close of candle 3, you're now losing. So you're probably going to get out as we talk about like day trading, right? And once again, these candles could be months, days. It really doesn't matter. Price action is price action. Somebody's losing all the time. Even on the longer charts, it's the same stuff. Somebody's losing there too, right? So we still did not get to the high, which was here. Little range bar. So now we're kind of struggling to get through here. All right. Next candle, what happened? Another ranging doji candle, but candle number 3 is still intact. Right. So it's kind of like in my head, like I'm as a bull, my support, my strength is please don't go under this candle. Right. As a bear, I'm like, please go under this candle. Right. This little doji, please go back down there as a bear. Let me take some of this stuff off my chart real quick too. So you got the first 2 bearish bars, and then we took those out. This candle right here went higher. Number 3. Ooh, somebody's losing. When somebody's winning, somebody's losing. All right. These 2 candles, we just kind of ranging right there at the high. We won't go any higher. Dang. All right. So I'm gonna put a little dotted line. I'll make that dotted line. Because we want to go through there. We're not getting through there, right? So we haven't closed above it. We're testing it. We're trying to go. Not getting enough volume. Okay. Strong candle should get to the high. Small pullback, right? This might be it. We don't always get to the high. This might be it. This could have been the high for the day. We could have dropped for 50, 60 points, right? But forget all that guessing. The trend is still bullish. Candle number 3 is still intact, right? If I pulled up a 20 period moving average, we're still above the 20. I know I said I wasn't going to use any special indicators, but I'm going to throw a 20 on here for y'all real quick. Let me give you a little something. 20 and make that gold. Okay. So the 20 period moving average is kind of like to keep it really basic. Price, if we're bullish, will always be. You cannot mathematically get an uptrend if price is not above its average. You can't be a great student with below average grades. You can't be a MBA legend or all-star with below average stats. All right, that's all this is. That's the 20. In any pool of data, it's going to show you where the average is. Under the 20 downtrend, above the 20 uptrend. Right? That's all I'm gonna say. So you know what the 20 is now. We're above the 20. That gives you a little more confidence. Candle number 3 was really bullish. Okay, this candle here just kind of tested the 20, pop right back up. All right. Even if I went backwards to show you just a little bit of the 20 right back here. Look at that. Bounced off the 20 right there. Bounced off the 20 right in here. All right. Market was down. Crossed above the 20. We came back. And right in here, we held. This is what created that uptrend. Right in there. And we stayed above the 20. We've been above the 20 freaking all night. We basically, look at that. We stayed above it all day. All right. Let me come back. So we had this bearish candle. Where I was saying I had a trade that I didn't take was like right in here. I'm not buying off the 20 or something else that I'm using actually from a different time frame. A little sophisticated, but don't worry about all that. Anyway, my risk, what I was saying, was down here. The trade was like, something like that. I draw these risk boxes, trade boxes is what I call them. If I would have took that trade today, if I had it, it should have been like a 5-to-1, 4-to-1 risk to reward. I could have played it safe and just got out here, right, at the high. And even that would have been, let's just say, 55 to 75, 20 points. So that's $2,000. So you're risking 600 to make 2,000. But the market just kind of, paying attention. It generally is going about like 20 to 50 points. Yeah. So, there's an easy way to kind of have a target and still capture more. Anyway, I ain't even here to teach all that though. So this was another strong candle. All right. So candle number 4. So this was yet another bullish candle establishing really strong support. Okay. So if you a bear, you losing today. We got above the high. We had a little small candle, a little small candle. This was a candle number 6 that I was saying. Candle number 6 looks like it's a hammer, and it is, but it closed bullish. Right? It closed bullish, which is different. Let me show you real quick, which is different from this hammer the previous day, which was at the high, but it closed bearish. So we pushed up 20 points and then we dropped 40 points. Right. Whereas today, this candle actually pushed up about 20 points and then it just pulled back 10. That's mathematically different. That's not a bearish. That's not a reversal. That's still bullish. That's actually very bullish still. All right. So we got a little small pullback eventually. We sat at the 20. This candle, we tried to get back above. We kind of danced down there for about 45 minutes. And then we ran back to new highs before the end of the day. And we came right back down, kind of sat at the high. So that was the day. Trend was bullish. You should have known that. Pivot was there. We bounced off the pivot, did not close under it. Really key. Candle number 3 was a really strong bullish candle. That should have screamed, we at least going to try to get to the high. We pushed here, right? We got really close on this candle. We got really close to the high. That could have been it. Could have been it. Some days we won't get to the high. You'll be like, oh, I Noble said it was going to go to that. No, Noble didn't say that. Noble said it has a high probability of trying to get there. We pull back. We're still above the 20, right? Shot right back up. You want to have a good risk to reward with this intraday stuff. You got to go to a smaller time frame. I'm not trading off 15-minute candles. The candles are too big. All right, but I'm using the 15 to 30 to 5-minute, right, to help me make decisions. And the market was bullish today. Bounced off the 20 here. Got really close there. Bounced again off the 20 here. All right. So hopefully this helps. Let me see. Did somebody else say something? Oh, screen not showing. Yeah. Okay. So I wanted to go back through all of that, which I did. So that's about it. If you want to watch more of these videos, I got dozens of hours on my YouTube channel. It's I need to change that. It's actually Being Noble. BEING Noble, Being Noble. That's all it is. So check out the page. A lot of good videos. Free futures training, kind of walking you through kind of what futures are. I've been on this price action kick because I see so many people just not, depending on all these indicators. Every indicator is flawed. Nothing is perfectly going to be able to tell you what's coming in the future, right? To really master an indicator, you need to know the pattern of when it doesn't work so you can filter those signals out. Bollinger Bands, I love Bollinger Bands, but I love them because I know when they also do not work and when they'll lose you money. Every single indicator you can use, they're not perfect. Nothing is, right? Nothing is. So if you need some help, or if you want to sign up for a really, really powerful course, go to limitlessclass.com, my website. Right now I'm running this 7-week options class and a live 7-week futures class as well. The technicals, here's the funny thing. The technicals are the same core technicals. Doesn't matter whether I'm trading options or futures. I'm still looking at price the same way. Now futures are different, so you gotta be more specific. You don't have time. With options, you got time. You buy a contract and give it 6 months. You don't have to be right today. With futures, you got to be right today. Right. So if you need some help on the advanced side or just with some of these basics, I got a really dope membership program too. It's only like $60 a month. You can't beat it. It's like 40 hours of content. So anyway, thanks for watching. Share this video as my mother in the back of my mind, man. She's always in the back of my head. Because whenever I show her these, if I don't say this, she gets on me. So thanks for watching the video. Share this with somebody that you know and that you love who needs to think more seriously about investing, putting their money into the market somewhere where you will be growing assets, building wealth, and not just being a consumer. Thanks for watching. Peace. Until next time, go to the page. Being Noble. Tons of great information. You're going to love it. I'm out.